And gentlemen of the crypto space, we're live on a Monday, January 13th at 11:33 a.m. Whole lot of stuff coming out of last night, basically 6, 7 p.m. Why? Because that's when the markets internationally start to deal with the dollar and the bond market. And this is entirely a response of what's going on in macro land. So, looking at the Bitcoin chart right now, keep it very simple. There's no secrets to this. There's no why is Bitcoin going down? Why is it going up? It's a manifestation of the global economic situation. 1 second, please. 1 second, please. Okay. No, just a work message. Okay. So this is all a manifestation of the global economic situation. And if you're trying to understand why Bitcoin is doing what it's doing, you're looking at the wrong data. And that's what we've been talking about for years at this point. So DXY this morning was ripping past 110. Okay, so folks are like DXY, oh, dollars. Then I'll give try and be short and brief, but the error for Americans, for North Americans, for United Statesians, is to think in terms of you get a dollar from a paycheck, and that's normal. For the vast majority of humans on this planet, they don't earn in dollars. Europe's earning in euros, Japan's earning in yen, so on and so forth. So when you want a dollar, you got to buy it. That's a very alien concept to people in the United States. So when you see the dollar past 110 on the DXY, there's obviously more granular details if you look at very specific cross currency pairs, but that's indicative of people buying dollars. Now, you got to understand the global economy is not a manifestation of people, it's a manifestation of what people create corporations, international trade, so on and so forth. It's all dollar denominated. Vast majority of transactions on the planet are in dollar terms. So the culmination or the total net effect of all the individuals around the world and all the corporations that want to do transactions in terms of dollars are resulting in this tremendous dollar demand, pushing the DXY past 110. Oh my goodness. The problem is it's recursive. As the dollar gets stronger, that means more currency, foreign currency is needed to buy dollars, which means when the dollar gets stronger, it's inflationary. It drives up prices, especially in Japan, very sensitive. Um, so then it drives up the dollar more. So dollar strength begets dollar strength. It's just recursive. So it's a very precarious situation right now. 110. I mean, it's going up. So what do we always say about technical data? Directionality persists until capitulation. I don't see no capitulation on this chart. I see up. And I see every dip getting bought. Anytime there's a discount on dollars, folks around the planet are buying dollars. So capitulation will likely have to come in the form of intervention, but it's not intervention like what Japan does when they dump their treasuries or China dumps their treasuries, because there's geopolitics in play. The United States Treasury Department does not want anyone to dump their treasuries. The whole point was of the entire structure of the system was that people make excess capital, countries make excess capital, and store their capital in United States debt. That allows us and has allowed us for 50 plus years to deficit spend till our eyes and ears are bleeding. So all this geopolitics and also regulatory consideration, meaning Treasury doesn't want people to dump bonds because that drives up yields further. The Fed is uh, uh, their quantitative tightening, they're unloading their balance sheet, they're driving yields up. The dollar strength is causing countries to consider dumping their savings because they may need dollars. And how do you get dollars? You buy them. How do you buy dollars? You sell treasuries or you buy them with exports. China has a surplus of $1 trillion. China is one of the largest buyers of United States dollars. How do they do it? Amazon. When people when people buy stuff, they are in fact purchasing dollars using manufactured shit. When you buy parts, tools, stuff. So that flip the script to understand how the system works. Instead of them selling a product and we're buying a product, they're literally buying dollars using toasters or toys. That's the currency they're using to buy the dollars. And that's how you understand a little bit better how the forces in global finance works. So a lot of macro folks are very strong on the statement that this has to reverse. It has to, and I'm in that camp. I'm in the camp where if this goes higher, everything's going to fall apart. And I've also stated on social media that if they don't raise rates really soon, um, that's a precarious situation, which is very counterintuitive. Everyone's like, they got to cut, they got to cut. So you got to understand everything has a duality of knock-on effects. Cutting interest rates has domestic effects, but it also has international effects. You cut rates and interbank lending and borrowing, it costs less. It allows more financial activity, less fees. You cut rates and the spread between Japanese bonds, JGBs, and US bonds, treasuries, long end, uh, decreases. So, for instance, Conks recently mentioned that there's a 75 basis point spread that needs to be filled. Otherwise, you're not going to get significant capital flows from Japan into the United States. Now, US equity markets are a complete manifestation of the carry trade because of the massive spread when Japan was at zero or negative interest rates. But that spread has contracted, which means it's not as favorable for capital flows from Japan into the US. Especially you need the spread to cover the expenses and the arbitrage and whatnot and your insurance. So that's why I say if they do an emergency rate hike, 50 basis points, which they're never going to do. When I say emergency, that's complete hyperbole. They're not doing no emergency rate hike. But the point is, if they raised interest rates 50 basis points, that increases the spread between JGBs and U.S. interest rates, and that'll trigger flows into the United States, and that'll cause the markets to rally. So we're in a very contrarian world, which is something that I've been describing for maybe two years at this point. People expect the cutting of interest rates to cause a bull market. People expect quantitative easing. Now, quantitative easing is another story. The cutting of interest rates unto itself is not what the market needs right now in order to continue rallying. What it needs is higher interest rates. So this is starting to look like confluence that supports what I've said for a bit, where I expect higher lows and higher highs on interest rates. And you see that in the 10-year chart when you grow out like a 6-month chart, if it loads. Now that is going back to 1912, 1913, or whatever. We had higher interest rates from the 40s to 81. And then we had a blow off bottom. And now structurally, it looks like he may breach the 200 SMA on the 6-month chart for 10-year interest rates. What a wild chart. Higher lows and higher highs is a general expectation of mine because that's structurally what the system is saying. One, it wants; two, what it needs right about now with prevailing inflation, so on and so forth. Um, our volatility has been suppressed pretty meaningfully. So there's obviously multiple components to the story. It's not just dollar up. destroys everything, that's the case. But you really want to see things blow up. You start to see the volatility in the bond market blow out to the upside, which is exactly what we saw in 2020 and what we saw with the blow up top in 2023, Q1 2023. But they have been able to manage to suppress this volatility to a great extent, especially as compared to 2008. Now, that's probably where my mind is at, where we're heading. We're probably heading into a scenario where we have relatively elevated dollar, you know, relative dollar value and suppressed bond market volatility. And this is where the concept of quantitative easing comes in. And that's not the solution. That's probably be a really bad thing for them to do. So if they do quantitative easing under these conditions to suppress bond market volatility, because that's all it does. Quantitative easing suppresses bond market volatility. They're becoming a market actor. Fine. So that signals to the market that they're screwed. And this is a very different situation than the last times they've done QE, not QE, or whatever they wanted to call it. They start doing QE under these circumstances, and the market's going to see right through it without hesitation, and that will have unpredictable results. Either the world calls bullshit, or maybe there's just a complete melt up. It's very much, and we're in a binary reality of everything's going to either collapse or go to Valhalla, so to speak, to the moon. It's really that severe. Um, and dare we talk about like intervention as policy that drives the value of the dollar down, which is consistent with the incoming administration's stated agenda. You need a weaker dollar to promote U.S. domestic manufacturing and export. Can't do it with the value of the dollar like this. It doesn't work. So right now, the value of the dollar is completely contradicting the desired policy of the incoming administration. Period. Which is a fascinating takeaway of current conditions. That's why macro folks are calling for a top in the dollar. It'll have to be policy driven. It'll have to be, which is intervention, meaning geopolitical collusion, where state actors are making decisions and coming to agreements that facilitate the dollar declining in value. The dollar just wants to go up in value because of the total global debt outstanding dollar denominated. That is just the way the system works. So what you do to understand the system is you take the way the system works and you work your way backwards to understand the shit that causes the system to work the way it does. And that's how you can understand basically the stuff that's going on in the market right now. 0.61% on the 10-year, relatively muted. At least that's what the move indicator is saying. Check back on Tuesday, Wednesday of this week, and we'll see where the move indicator goes. I suspect that we see a continued decline in the move indicator, which will keep markets from becoming volatile. That'll suppress, if you suppress bond market volatility, you're going to suppress volatility elsewhere. Now, the Fed has very interesting facilities, which I speculate, such as the DTCC, centralized clearing of United States debt, which can facilitate the slowing of transactions or whatever. And I could speculate that they have a capacity to suppress bond market volatility, much like they have a capacity to suppress equity market volatility by, was it the SVIX or whatnot, which is relatively new. I don't have the chart up, but I was introducing like 22. So if they could suppress volatility, they ultimately suppress people's volatility. People's volatility is a state of anxiety. Like, oh, I don't know what the fuck's going to play out. People start freaking out and they start making big moves. So the policies of our government affect us as individuals. Bitcoin's at 92. Let's go back to a daily chart for the guppies. So breach the guppies to the downside. We always say that support is a position of weakness. This is overwhelmingly an expression of weakness. This is overwhelmingly a distribution to a degree, and certainly a rolling top, lower highs, and now we have a lower low. Could be consistent with the falling wedge, somewhat, maybe. Yeah. I wish this top was a little bit lower. That'd be more of a falling wedge. But that is not a position, an offensive position. That's a defensive position. And then you have some sort of trigger that causes a continuation to the upside. But that would have to be against the backdrop of a declining dollar and further decreasing bond market volatility. As I've stated for a while, you start to see move go through 80, dare I say 70 and 60, and things get weird as long as the dollar doesn't have volatility into itself. Now, we don't have a volatility indicator for the dollar, which is unfortunate um, because people look at this data. Move indicator has become very popular over the last couple of years. Suppression of volatility is very understandable in crypto terms, as I've described. And if you guys want a description, please feel welcome to ask. I will describe it again. But we don't have that kind of information for the currency markets, which would be very useful. Now, people, I'm sure, especially large actors, hedge funds, whatnot, probably extrapolate that data to get a sense of what the hell is going on in the currency markets. I do find it interesting that folks, not big known macro folks, are expecting the dollar to reverse. If it doesn't reverse, there will be no stability in these markets whatsoever. Now, I mentioned this morning that there's the core assets or the meaningful assets that have held the daily guppies thus far. And that's very notably stuff like Bitcoin. Curve did hold, but it failed. Let the guppies draw, and you'll see. Same breakdown, very similar to where Bitcoin's at. Go over to Aave, that breach. This is a good example of something that breached more meaningfully the daily guppies to the downside, but it is still very comparable. You'll see across, mid-tier assets, not meme coins, but more mid-tier, a significant deviation of the guppies to the downside. Um, barring any significant changes in the market where there's more favorable conditions, we're on a downward trajectory. It's just that is what it is. So the most important thing is set your expectations and understand that is the case. So you understand the odds are likely, more likely than less, that we continue a downward trajectory towards a price where the market says something is properly valued. And we're probably looking for moving averages at that point. So levels are interesting. Moderate level, probably the most meaningful level is here from a daily perspective. Certainly here, 175 for Aave, which would be more or less the 200 SMA. Levels often correspond to moving averages in very interesting ways. It's all connected. So don't take it as a coincidence that a certain level may correspond to a relatively meaningful moving average, like a 200 SMA. Let's look at Bitcoin moving averages on the daily. Be quite reasonable to see Bitcoin at 86. Have a fat wick down to 78, or even a fatter wick down to 73. When the ETFs launched, we were in the 40s. These are all very reasonable mean regressions. And that would be a very interesting level because that coincides with previous all-time highs. And that'd be very interesting. 'Cause that'd be a whole year rolling top distribution, only to find ourselves at all-time highs of last cycle. And that would completely invalidate this as a breakout. So if you zoom out, you get a better perspective on what that means. So here's maybe I turn off logarithmic. Nah. So this is the monthly chart. And this is why folks get their panties in a twist. It's been 3 months since we broke from the 70s level. That's it. $20,000, 25, 30, $30,000 move on Bitcoin, 106, give or take. 33,000 more specifically. There is no reason a mean regression to the lower 70s is scary or ugly. In fact, that would make a great deal of sense from a technical perspective, considering this move up over the last 3 months. That would instill a great deal of confidence in the market if a previous resistance failed or a breakout failed. We never had a retest of the upper 70s. So retest instill a great deal of confidence in the market. And you're coming off a great deal of a distribution. So that would be really healthy for the market, actually. Hope that helps. It's better make sure your collateralization ratios are decent for your Bitcoin. So you don't even like zero risk for liquidation. I don't know. I always encourage significant over collateralization, 15 to 30 grand. You're not going to see those numbers. The whole world will be falling apart. In that case, who cares? Okay, let's do this. We can do some commentary if you're on X or on YouTube. Please feel welcome to make your inquiry heard. Let's talk about it. What's on your mind? How can I help today? Hey, good morning. Cap C, what's up, y'all? Grand Rising, Cap. Not all concerned about the sell-off because AI bots and crypto Twitter says the bull has barely started yet. The bull it hasn't started yet. How do we know that? We can inspect the dollar. The bull market is most strongly expressive on the dollar chart, and this is a decent presentation, but you can see it better on the daily, maybe the weekly. Yeah, let's look at the weekly. Let it draw. There's your bull market in red guppies. So the historically, when you think of 16, 17, 20, and 2021, your bull market was because of these red guppies. There's a significant deviation of the dollar below its historic 200 weekly moving average to the downside. And when you visualize that, the guppies turn red. That means short term moving averages are basically all pointing in the same direction. And that's why these color indicators are quite depictive of these conditions. You want to see red, and that is not near where we are. Um, these are big bull markets, guys, and we're coming from these conditions after a blow off top in 22. You see some red guppies. Market's going to be quite interesting considering the total global dollar composition, total dollar supply. Things are going to be very interesting this next cycle, and dare I talk about 28, 29, 30, so on and so forth. Assume, good morning, Cap. Much a pleasure. DCA man, good morning. Mr. Barada, best salute ever. Always a pleasure. Blue Demon, hello. Hello. Connect the dots, confused. Thought the DXY going this high and higher breaks everything. It is breaking everything. It's got to start to break everything. But they are suppressing bond market volatility as expressed in the move indicator. So they are pulling their levers. They are pulling their levers. If the dollar is this high, international community needs to sell shit to get dollars, and you sell your treasuries. Nasdaq is showing weakness. When you have weakness, things roll over, and weakness causes more weakness. Markets have a way of having momentum. You're not going up, and you're going to start going down. People front run that. The market's forward looking. So unless there's some sort of change in this directionality, that's going to spook more people, and that's how things get viral or sentiment goes viral where fear spreads and it becomes more fear and then more fear and it grows. Directionality persists until capitulation. So unless we see significantly changed data on the DXY level or the move level, we should expect continued depreciation. A move to 109 from this height, yeah, you're going to have a rally. And then the rally reverses. And let's see if it's a higher low, higher high, lower low, so on and so forth. But generally speaking, we're in a topping pattern for all markets across the board at this dollar valuation. The market is thinking, what the hell is it going to do? Is the dollar going to go back to previous highs, relatively local highs, 118? Where was the dollar? What was the local high? It wasn't 118. Damn, trading views getting bogged down. It's low AF. Yeah, it was basically 114. You start to see the DXY at that level and things are falling apart. Falling apart doesn't mean Bitcoin puts in a $20,000 1 hour candle. Falling apart means the evaporation of confidence. The breath, BREADTH, is a very big thing. If markets aren't going up, they are likely to start going down. And as people start selling, they're likely to go down further. Markets have a momentum to them. And as that momentum fades, so does directionality. Hope that helps. Blue Demon, are you even looking for discounts now with the pullback or more hesitant due to current volatility? No, I'm looking for discounts. Discounts I find on the lower cap stuff that I find interesting. Um, Primarily the only thing I'd be interested in is like a Tango or a Spectra, but Tango pays nicely. And analytics, 487 mil in open interest. Very interesting. This is very interesting, to say the least. Not that, this, and Spectre doesn't really pay right now. So that's a voter escrow model. I expect I don't expect this to hold. It's just a voter escrow model. It's got a lot of emissions. I expect continued depreciation. I don't expect it to do what Curve did upon inception, but I don't expect significant strength. If anything, this is maybe more comparable to the emissions of B33s. It's voter escrow, but maybe my expectation is chop or horizontal leveling, as I've described the voter VE33 charts. So I'm not surprised to see the lower level hit, but it doesn't. This is a remarkable protocol, by the way. This thing has the enormous potential in the market. It's more interesting than Pendle. Pendle's voter escrow. So the market could do weird things and just blow it off like Pendle at 100x, but it's irrelevant for the way I manage capital. I'm more interested in sustainable cash flow. So in that regard, I'm just not too interested for including it in the portfolio. Tango, on the other hand, just pays very, very well. Now, the emissions are going to serve the consuming protocols very well. And this has the potential to be enormous. Enormous. There's no reason that every LP on every chain shouldn't be in here. I don't know. I can only imagine what is possible with this protocol. I think this protocol has much more potential than Pendle. But that's besides the point. Separate consideration, the inspection of the attributes of a protocol versus include consideration of inclusion in a portfolio. Two very separate considerations. Look at AWA, for instance. That thing had a big rallies with its centralized exchange listings, but that's a full retrace, ladies and gentlemen, right down to the lower level. And notice the bounce. Levels are very meaningful. Everyone's looking at this data, and that's why the levels have the effect it does. See a breach of a level, it's going to another level. It's just the way it is. So AWA does pay pretty respectable 20 plus percent. And AWA is just as exciting as Spectra. And AWA is literally the end game for Curve ecosystem. It literally uses Curve LPs and it facilitates cross-chain arbitrage. It's literally crazy from a protocol standpoint, the functionality it provides. And as I said, there's a complete it's a strong line separating the inspection of a protocol from inclusion in a portfolio. Two separate considerations. This protocol is insane what it does. Spectre is insane what it does. Tango pays. So as for discounts, maybe I'm not leaning towards it. I'm not in the position to ask the wife. I just don't want to. Capital's there, but I'm more of it's okay. I made my bed. I did my shit in 23 and 24. I did what I had to do. I made good choices, and the portfolio is constructed very well. Good balance, good position sizing, good cash flow, obviously. Oh, the total net worth goes down. The total net worth goes up and down and up and down, and then every couple of years it blows out to the upside. All right, great, what we do. Total net worth doesn't mean shit. You do need to reinvest, but I think there'll be better periods for reinvestment, which implies Buffett methodology. Stack the bag, stack the cash, and then when the whole world is falling apart, you pick up the pieces. I mean, Buffett literally waited through, I think, 2020 to stack the bag to where it is. And unless you get that extraordinary circumstance where a hostile takeover is the case, and that was the case. Like if you imagine you stack the fat bag in like 21, and then you're sitting on I don't know whatever, and then you see a curve at 20 cents. There's your discounts, and that's obviously a historical reference, and that comes from hindsight 2020. But those scenarios will occur again. That's the way the system works. That's exactly what Buffett did. Just stacked piles of cash when things were good, and he cleaned up and swept it all up, swept the floor when things were bad. As simple as that. So that is my base frame of mind for how to proceed. I don't need to buy anything. At some point, you have to be content with what you own because the fact is, you guys are a minority. Own assets? Assets that pay you? When I talk to family, that's just barely a glimpse and trying to wrap your head around a perspective that we could never have. You're literally on the stream with me right now. 99.99999% of people, the content we talk about is off the radar. It's just not even a consideration. The concept of owning assets. For the 99.9999% of people, if you own an asset and you have a bill due, you sell your asset to pay your bill. There's no such concept of asset ownership being so significant that you have to find another way. So you have to balance your capital management. You have to have adequate receipts from work, a W-2, to pay your bills. And then and only then could you afford the capacity to own assets. Asset ownership that's it. There is nothing else that could potentially lead to overwhelmingly everyone's expectations. No other path. Well, they always say, what, the 99% control everything. Yeah, because they're not selling their shit when shit gets bad. Like, net worth means nothing. Think Buffett squirms when his net worth is up and down 10, 20, 30, 40, 50 bill. It's not a number to be inspected. All that matters is cash flow. Good morning, everyone. Hi, George. Connect the dots. So need higher interest rates, but DXY has to be pushed down with a catch 22 is all over the place. You want higher interest rates to increase the spread between JGBs and treasuries. Um, but higher interest rates are going to increase the value of the dollar. I don't know what they're going to do to get the value of the dollar under control. You drop rates, it's supposed to devalue the dollar. So their primary policy tool is not as effective. It's not being effective the way they need it to be. So I don't know. I'm what I know is every day we get up and we get to see the market. We get to see what the market's doing, and the market tells us a story. And this is that story that I'm telling you all today. You think Sonic will pull a Solana? Uh, I mean, what does it mean to pull a Solana? I think Sonic will pull a Phantom, especially in a bull market. I'm just the consideration there is do you have exposure? Everyone should have some exposure to Sonic. It doesn't have to be overexposure. It could be marginal exposure, but exposure. So you got your V33s. What do you got? A was on Sonic at this point, so that's cool. So there's a way to get capital in and out. Um, but that's gonna be much more volatile than everything else. Sonic's gonna be so volatile, and Solana's gonna be so volatile. I mean, mainnet's gonna be volatile, but guess what? Mainnet's gonna be less volatile than everything else because time in the market. It's a much more trusted place for capital. I'm not even gonna go to DeFi Llama and look at the stablecoin composition. I'm sure the mainnet is exactly the way it was. Multiples of everything else combined. So it was a long time and 23, 22 and 23, I wasn't anywhere but mainnet. And then it took to 24 to start to get into like Arbitrum and Optimism. And it wasn't until probably mid 24 that had reasonable size outside of mainnet. You don't have to chase shit. And you can have relatively small positions. I always said 1% to 10% changes everything. And you can do 0.1% to 1%. Because 0.1% to 10% really changes everything. Food for thought. Sir Joe, President of Canada first, sir. Yes, sir. Yes, sir. High do you think the DXY goes? Any levels of interest? Yeah, if it goes higher than here, everything's going to fall apart. This means crash in 5 seconds or less. It means confidence gets eroded. Goes any higher than here, the administration and the regulators have a problem with the economy and they're not in control. You get sustainable breath above 110, and we're going to be having very uh, undesirable stories to talk about. Interesting, no less, because it's always something to tell in story mode. But, most people look for up and they can't process down. And their expectations, you got to adjust. My expectation right now is depreciation. It's my expectation. Am I doing anything about it? No, I expect my net worth to decrease. But my expectations will likely be met. So I'm not disappointed. Might never matter. So something like that. Anna said, "Hi Cap, at what level of DXY the upside? Things look very bad right now. Right now. Right now. 1 second. Got I'm gonna have to cut the stream in a couple minutes. Right now, it looks bad. This is bad. This is bad, 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 bad. Right now, you are in bad territory. Can't be more clear than that. Let me see if I could hit some comments. Brian, how are you? Happy Monday, Arrow. Looking forward to seeing what Napier can do. Speaking of Spectra, yeah, yeah, yeah. There's all interesting stuff. These are all synergistic protocols, ancillary, so to speak, and contributive to the Curve ecosystem. So this all bolsters the entrenchment of Curve. What's the most important thing to look at with regard to Curve is right here. $86 million in total supply, and even better, if you go over here, there's $6.2 million worth of PegKeeper debt. That is insane. These numbers are insane. What's the price? Like, oh my God, this is astounding. Absolutely fascinating to watch this play out. How SCRV USD has $27 million worth of deposits. This is just wild. Um, it's exciting. It is working as designed. And that's exciting because the way it's designed will facilitate significant expansion of liability. And that's everything we talk about is dollar liability is the biggest business on the planet. You're looking at what's got to be the most interesting business on the planet. I don't give AI is great and electric cars and all technology. It's exciting. This is crazy right here. And the data that is being expressed about the overall situation of it, it's a loss for words. It's elegant, and this is literally beautiful. 85 mil outstanding, peg keeper debt. If without the peg keeper debt, you'd be above peg, and you're at a dollar, 0.9999, 5 digits. This is astounding. The advisor in the house. How are you? Always a pleasure. The cat. Blue Demon, I think the best buy at the moment could be Guns and Butter due to global trend right now. It's always Guns and Butter, but that's the whole thing. The whole thing of capital management is folded into existentiality. The whole system is on the verge of collapsing, always, even in good times. So, how do you live life? The better you cover your bases, the better you hedge. What do you think Guns and Butter are? It's a hedge. What is savings? All right, you lose a job, then you got 10 grand in the bank. You got bases covered. Everything is a hedge. And I tell everyone repeatedly, you got to wake up in the morning, cool, calm, and collected. And the only way to do that is to have your bases covered, to know that under this circumstance, do this, under this circumstance, do this. And that's resiliency. Need to be resilient. Um, Gonzola, 9 Gonzola. I think I got it. I think I got it. Sir, first of all, a reminder that the smartest and most beautiful anons have gathered in this chat. Everyone's welcome, ladies and gentlemen of the crypto space, because the only way to engage with the most volatile market on the planet is to understand it and to understand the way it fits into the macroeconomic landscape and to know how all the pieces of the macroeconomic landscape fit together, to know the knock-on effects, the cause and effect, the push and pull, the pressures in the system, because then and only then could you potentially be comfortable with all the shit the market will throw at you. Hope that helps. Secondly, I hope someday you will have a minute to turn on auto captions somewhere in the channel settings. I'll take a peek. Folks have mentioned it over the years, and I probably should do much better with that. We'll see. It's just me. There's no channel here. There's no team. It's just an old man talking. So a lot of these folks on social media have big subscriber bases and big revenues and big teams. And hi, just me. Buddy Lawrence, good morning, Cap. The market volatility is good for selling and it's exciting, but when the market starts becoming predictable, cash flow with what you own will be what's left. Yeah, something like that. Right now, the volatility, expect outsized cash flow this week. Receipts are going to be up, um, but that's okay. Up and down and up and down. It goes up, it goes down. That's not the inspection. That's why you need to write down your rules. And your success is you measuring how you engage with these markets against your rules, not about bullshit like total net worth. Execute against your rules because then you could always say, I am doing exactly what I set out to do. I am being rigorous. I am crossing my T's and dotting my I's, and I'm being consistent. And that is respectable. That is meaningful. Only position I've considered taking is Tango. The revenue is juicy. Tango is very interesting, as I mentioned in this stream earlier. Um, Very nice open interest. Pretty sure it's still higher than DXDY, which is insane. Its market cap is meager in comparison. Um, with low market cap assets, can be just as volatile. It's probably end of January, so there's Otango still to be sold. But it's from a position standpoint, it's get it as cheap as possible, and it pays what it pays. And the price of the position is in a position. It's ownership, as we've discussed, and that's obviously trying to tie in so many conversations we had over the years. So not easy choices. But just remember to treat cash as a position in the portfolio. It is imperative that you have a well balanced portfolio. You have effective cash. You're accumulating cash in the bull market so you can buy hostile takeovers in the bear market, so on and so forth. And that is that's the way it is. Last couple questions. I'll wrap it up for today. DCA man cap. Do you know D Trinity on Fractal? Very interesting model. Um, for me, just Frax. I've had Frax positions since they launched. What to say about Frax? Frax remains probably the largest scale and scope project in the entire crypto space. They have lacked a bit of traction lately. They have lacked a bit of traction for a long time. I am fond of Frax. I am fond of their development process. I am fond of their deployments and their communications. I'm fond of their product offerings and tech stack. The best tech isn't always the best investment. That's always a valid statement. And in conclusion, I like Frax. That's it. Arrow, interestingly, Mantle stablecoin supply is trending up. Good to see. Mantle, Linnea, Arbitrum Orbits, Optimistic Superchain Narrative, Sonic, Solana exposure is important in some way, shape, or form. Base, Aerodrome versus Velodrome drives me nuts because with Velodrome you have exposure to the endless superchain, and Aerodrome is a one-off. So if I had a choice and Aerodrome was printing much more than Velodrome, I don't care. Velodrome offers infinitely more exposure because it grows and grows and grows and grows. And that was one of the most powerful positions to own, something that automatically grows because that is a free position. And that is akin to a free position. It's an expanding ecosystem. And that is something that cannot be ignored. Hope that helps. Be the bride, be the baloney. What was that? Man, I'm such an old parent. That's from Mickey Mouse Clubhouse. Be the baloney. You parents in the chat might know about Be the baloney. I'm just saying, okay? Let's wrap it up for today. I appreciate you all. Monday, January 13th, 12:20 p.m. 287 people made it to the end of the stream. I appreciate each and every one of you. And together we are all a little bit more rational because of it. I wish you all a good one. Stay sane, stay cool, calm, and collected. We'll be back on a Wednesday. And that's the way the week will go. We'll see the data. We'll talk more about it. See you then. Peace.